Welcome to the Rigatoni Capital podcast on Substack. I'm here with my guest, Kevin, also known as Bag Holder on Substack. How you doing, Kevin?
I am outstanding, sir. Glad to be here. Thank you for having me.
We come to you the night of February 25th. NVIDIA is probably starting their conference call already. And, they reported a beat and raise. And I think that we don't have to dive into that because we haven't really had a chance to look into their earnings report. So what we can do is we can start to talk about energy. I think that's the topic you wanted to discuss to start off.
Yeah, yeah,
And I
that's
can share my screen here too, so we can go over any tickers if you want to, or just the ETFs or whatever you want to do. So, if you want to start off on what your thoughts are on energy right now, and maybe I'll share the screen if there's something we need to share.
sounds good, sir. We've talked in the past on a couple of our prior podcasts about ExxonMobil, which I like a lot, Energy Transfer, which is ET. Those, of course, are a couple of my favorites. There's still holds and there's still add tos when you can get a dip, but they've both been on a pretty steady rise all year. So having some or wanting to deploy more capital in that area, I put a considerable amount of research in the last 6 weeks, trying to find names in the energy sector that are, I don't want to say ignored or undervalued or something along those lines. And I've come up with a few I want to share today, and hopefully your listeners will take a look at them because I do think there's some value there. But I'll give you my 2 cents and we'll see what you think. The first one that I find a lot of appeal in is Constellation. Symbol is CEG. I don't know how familiar you are with them.
A little bit. They're more of a utility, I thought. No?
Yeah, they're one of the biggest energy producers in the United States. In fact, I think they have a overall, I think their market share is like 11 or 12%. So of all the energy put out in the US, they have a huge slice of it. If you're to look just at the nuclear sector, I think they have like 20 or 25 active reactors right in there somewhere. They've made deals recently with Meta. They used to own 3 Mile Island, which Microsoft bought about a year ago. And what I find interesting about that is, nuclear energy for a long time has been like a pariah. Nobody wants anything to do with it. There's danger there and risk there, and it's difficult to get the plants opened, and it sits on the balance sheet and doesn't do anything. And I think when Microsoft came along and bought 3 Mile Island, they really showed the world that nuclear plants, there's value there. And considering that these guys are sitting on like 20 of them, and they produce about 30% of the U.S. Nuclear energy, it's a huge slice. I think they produce 12% overall and about 30% of the nuclear. Um, so you look at it and you look at the deals that they're making with the hyperscalers who are going to continue to need energy. And the question is, where are they going to get it from? And you look at the options that they have. Natural gas has some appeal, sure. But nuclear it's the cleanest, it's the safest, it's the most abundant. There's a lot to like there going forward. And they're priced a little on the expensive side. If you look at the financials, I think their P&E is around 35. Their price to book is about 7, I think. That's usually more than I like to pay for that type of stuff. But when you consider where they're positioned as far as nuclear power goes, I really I think the future bodes well for them. So again, that's one I think that's certainly worth taking a look at. Uh,
So let me jump in real quick if
yeah,
you
yeah,
don't
yeah.
mind. Yeah, I'm pretty familiar with the utility sector. I own the XLU and I own NextEra Energy. And CEG was a much larger holding, I'm noticing. Now it's only a 6.8% holding of the entire US utility market ETF. And Next Era has been on a tear. Right? Next Era is now hitting all-time highs. And Next Era, they have some nuclear exposure, but I think
They
you're
do.
right. I
They
think
absolutely do.
CEG
I did
is,
look at it. Yeah.
yeah, I think CEG is a little more striking these type of deals with a Microsoft and Meta. Did you say that Microsoft bought 3 Mile Island, or they just did a deal with CEG
I
for Three
think they
Mile
have like
Island?
a 20-year lease to get all the energy out of it and to get that plant turned back on.
Mm-hmm.
Now, if you think about it, it's been sitting on their balance sheet doing nothing for decades, and all of a sudden I don't know what Microsoft paid. I have to look it up, but I want to say it's nearly $1 billion or 900 million or something along those lines. Um,
Yeah.
but and again, it's not the only plant they have. They have 20 of them around the country, and mostly on the east coast or northeast area. But like I say, they're a big producer. They're relatively safe. I don't see a lot of risk. I think they're going to be able to grow earnings. They've been buying back shares considerably too, which so they're shrinking the float, which is going to naturally push the price up. They do seem to have separated considerably from the XLU, like you're saying. If you look at what the XLU is returning
Mm-hmm.
relative to this company, and I think you'll see that they're doing better. And I think part of the reason they're doing better is because of the nuclear assets.
Mm-hmm.
So like I said, I think it's a safe place to go. The chart looks fantastic. The financials, little more than I like to pay for that type of stuff. But I did take a position in it in the last week, and it's just hard to see the downside from there. And this isn't a trade either. I mean, this is something that I plan on holding for years, like you. It's not
Mm-hmm.
something I'm looking to get in and out of or make a quick buck, because I do think it'll take time. But I think long term, I think you're going to see a move to nuclear because it's the only place they can get this power from that they're going to need over the next few years. Or at least it seems like the most logical choice to me. And so
Yeah.
that's kind of why I wanted to play it.
Yeah. Um, I like it. I love utilities for like a good dividend play. And also, I've been following NEE, Next Era Energy, for a very
Yep.
long time. It's funny because their headquarters are near where my family has their condo down in Florida near Jupiter.
Oh, no
Uh,
kidding.
so I think that just was a coincidence, but I have followed them for like years and I've owned them for years. And I'm just showing you a chart here of like the people that made money in Next Era, man, because this is only 10 years. So let me go back to people that bought this stock back 2010. You have like a 558% return on Next Era
I know.
Energy, and you only have a 177% return on XLU, but really nice chart.
Yeah.
Um,
What's not to like? But the thing is, if you're looking to build a position, as much as I like the company, and it's hard to say that that's cheap, or it's hard to see the value there. I mean, you're certainly buying it at multi-year highs, and they are growing revenues, they are growing earnings. There is a lot to like there, but it's expensive. It's spending, and I'm a cheap guy. I like the stuff that where there's just at least a hint of value. And I think Constellation is that ticket, and that's why I preferred them. I did look at the Nextera, like you said, but I just I preferred Constellation. But they both have their merits, no doubt.
no, no, did you happen to look at any debt they had on their balance sheet at all, by any
Yeah, they
chance?
have. If memory serves, I want to say they have. Oh my goodness.
Well, they have debt.
Yeah, they
It's
have.
not like they're a debtless company.
No, they're not. But they do have a fair amount of cash too. Not enough to pay off the debt. Not like my second
Sure.
name I was going to give you. Um,
Okay.
but it's the assets on the balance sheet that I think are grossly underpriced. And
Yeah.
that's You look at what they carry the nuclear plants. I struggle to see a downside with that, and I think those things are really going to catch a bid, and they have a stranglehold on the industry. I mean, they own a huge chunk of it, so
Yeah.
I think they're well positioned. You know, if the Googles come at them and the Meta comes at them or Tesla, whoever it is that needs a bunch of power, I think that's one of the people they're going to have to go through, or one of the
Now,
companies they're going to have to go through.
in 2022, Next Era kind of got caught with their pants down a bit because the narrative was they had so much debt on their balance sheet that a spike in yields was going to hurt them, and it did. Like it took them since 2022 to get out of this, and the narrative was because of interest rates. So, they seem to be doing fine now. I haven't paid attention to them as much as I should have as an owner of the stock. So, but yeah, I like CEG. I think that's a good discussion to have right now.
Yeah. So sticking with the nuclear theme, another company that I like a lot is Centrus, symbol on that's LEU. If there's a choke point in the nuclear industry, it might be in the companies that can enrich uranium. Centrus is like the only North American company that can do that. They also have some advanced technology in that area. Specifically, I don't know if you know how they enrich uranium, but it's basically done in a giant centrifuge, and they have one that's basically state of the art that they've patented, and they're building a second one, I think, right now in Ohio, maybe, because there's such a backlog in demand for enriched uranium, and they're the only company in North America that does it. So if there's a choke point in nuclear or a place where profits could really grow, I think Centrus might be the one. I think they're trading around 200 or 210 a share, something like that. Now keep in mind they have about $100 in cash per share. Um, so you're paying 200 for the stock. 100 of that is cash. They don't have a lot of debt. They do make money, and they do have what I consider to be it's almost a monopoly in the ability to enrich uranium. And if nuclear is going to be a thing going forward, which I'm a believer in, this is another company that I think it's worth taking a position in. Do you have any thoughts on Centrus? Are you familiar with
Well,
them?
the first thing I am a little bit, the first thing I'm not really actually, but it was always in the discussion with the US taking a stake in them, and they went in another direction. They went with another uranium refiner. I think it was UA something or other. But no, I mean, this company has been very popular in terms of people owning it, and people made a lot of money in it, as I can see, uh, during this whole cyclical trade.
Yeah,
But no, I don't have too much of a thought on it. I see that Centrus was born out of the U.S. government. So it started the government-owned enterprise. This was a government-owned enterprise that spun out of the Department of Energy in the early 90s. In 1998, the government fully privatized it through an IPO and collected about $3 billion from the sale. So the government sold its equity stake when it privatized USEC. It didn't retain it, and then this must have formed into this company. But
yeah,
this is what the US wants to own, right? They want to have,
right.
you know,
And I look at it too, and I look at the technicals. It's trading below its 200 day, which to me screams value. Um, they did miss earnings last quarter, and they paid the price. They were, I don't know, $400 stock 6 months ago. So you're getting it half off. When you consider they have $100 in cash, you got to ask what's the downside.
yeah.
Again, they're in an area that I think could be very much in demand going forward, and you're getting it at a cheap price. And those things kind of appeal to me. I mean, you can take a deeper dive and look for yourself. I certainly recommend it. Or if anybody out there's thinking about it, please do your own homework. But I can tell you once again, that's another company that I've taken a position in recently. And It's not one I've messed with or owned in the past. It's a first time for me, but I'm trying to find more exposure in the energy sector. And I just think this is another name that it's worth looking at for sure.
Yeah, I'm just looking here. Company the US took a stake in, obviously Intel, MP Materials, which you're probably familiar with a little
Yep.
bit.
Yep.
Um, Lithium Americas, LAC. The Department of Energy restructured a 2.3 billion loan and took a 5% equity stake as part of a renegotiation in 2025. UUU, 4U's, Energy Fuels Inc., a uranium company that's been active in the nuclear rare earth space and has gotten government attention, but I don't see that they took a position there. Um, so that's probably what I was thinking of them and the Lithium Americas. So yeah, this stock has been on a roll since Trump got in for sure.
Right. And you're getting it cheap. I think.
Yeah.
At least relative to where it's been in the last 6 months. But you see the move that it made in 2024, and I don't I think that's coming back. I do. You're going to get demand for energy going forward, and it's going to have to come from somewhere. And again, I'm a fan of nuclear, and that's why I picked out those first two names. I do have a third name for you. Nothing to do
Okay.
with nuclear.
Ah,
Um,
ah. I was
it's
going to say, have you looked into BWX technologies by any chance in
I. What's the
your
symbol on that?
research? BWXT.
No, I have not. I'm going to write that down and take a look at it though. BWXT.
Yeah, they do all the they service they're the big contractor for the Navy's nuclear program. So here, PWX Technologies engages in the supply and provision of nuclear components and products. It operates through the government. The government operations segment manufactures naval nuclear reactors, including the related nuclear fuel for the U.S. Naval Nuclear Propulsion Program for use in submarines and aircraft carriers. But the reason why I own this stock and why I have loved this stock for so long is because when 3 Mile Island is up and running, this is the service company that will come out there and be the consultant and how to keep up for regulatory things. Like they are everything nuclear. But they're like behind the scenes. They're not actually the nuclear facility itself. But yeah, they're a very
So
good
they're a
company.
services company then.
They're a services company, yeah. Um, but I mean, I thought they were. It's obviously look at this chart. I didn't buy it at the lows. But it's a really, I mean, they got a crazy backlog right now, crazy backlog, and it's with the U.S. government. So,
Funny you should mention that. My next company is a service company, but it's an oil sector services company, and that would be Schlumberger, symbol SLB. I've owned them on and off since the 90s.
is this it?
Uh, yes, that's the one. A friend of mine that got me into that stock in the 90s used to tell me that it's a buy in the teens and sell in the 40 stock. And we probably made that round trip, I don't know, 4 or 5 times in the last 30 years. I
Mhm.
haven't owned it the last few years, but I'm very familiar with the company and what they do. They're the biggest oil services company on the planet. There really isn't even a close second. And if we're going to get in there and, take Venezuela from a company or from a country that's producing 800 million barrels of oil to something producing 6 billion, the first company that's going to get money thrown at them to go in there is going to be a company like Schlumberger. They're the picks and axes. You need an oil rig or you need a platform or you need drills or whatever. These are the people that, Chevron and Exxon contact to go in there and provide the parts and the pieces that are needed to they're not going to be doing any of the actual pumping, but it's like you said with BWXT, they're the service company behind the scene, okay?
Mhm.
Uh, I based on that and the run they've had since we've gone into Venezuela, I think they may have made a bottom for a while. I don't I I think that they're going to be cheap going forward. They're going to have a lot of money thrown at them by the Exxons and the Chevrons and whoever goes in there to Venezuela to turn that thing around. I just think it's a winner. And again, they're clearly the best of breed in oil services. There really isn't even a second name, which is why I've owned them on and off for years. But I did just recently institute the position. And it's just another name in the energy sector that I think has some value and one I would recommend people take a look at.
Gotcha.
I don't, one of the people that I listen to in this sector, by the way, is Rick Rule. I don't know if you're familiar with him,
No.
but he was on a podcast just recently and he was talking about Schlumberger for a lot of the same reasons I am. Uh, um, So just another person out there recommending it. One of the things that scares me about these last two stocks, Centris and Schlumberger, they're both Kramer picks. And I don't know if you follow Kramer too much, but I thought it was funny that when I pulled up those names that it mentioned those two as recent Kramer picks. That kind of scared. But whatever. I'm just basing it off the companies and their prospects going forward. And again,
Hmm.
none of these are trades. They're long-term holds for me
Okay.
and industries that I like and industries that are going to have a lot of money thrown at them going forward.
Yeah. Okay.
So, anyway, that's three names in the energy area that I like. Hopefully, some of your listeners will take a look there.
Thank you. So, what else you got? You want to talk about your portfolio changes that you made?
Yeah, well, those are some names that I've added.
Hmm.
Those three, I'm trying to find more in the energy area, and I'll DCA into all three of them. If they pull back, I'll add more. If they continue to run, maybe I'll put a little bit less at it.
Hmm.
But when I take positions, I don't just plow the money in. I'll take a small position and then add to it over time. And that goes for just about everything that I own is that
Yeah.
I just think it's the right way to do things. You try and buy them when they're trading, below the 200-day moving average if you can. And because stocks they'll gravitate around that, and you buy them when they're cheap and hope they run. If they get cheaper, you buy more.
Yeah, for
So
sure.
speaking of portfolio management and buying cheap, are you familiar at all with pair trading and how that works?
Um, I don't trade, so I don't pay attention. I mean, I haven't like done a lot of research on it. But when you texted it to me today, I was like, I just did a quick search on it, so I got the concept of it.
Right.
But I think our listeners would find value hearing it come from you. You probably can discuss it a lot better than I can. I hated the examples that it gave, the
Oh, really?
textbook examples, because I didn't think they made sense. I thought they were just so outdated. Um,
Well,
so
I'll
if
see
there's
if I
any,
can make it make sense for you.
yeah, maybe give me like more of an upgrade current examples on what you're doing.
Sure. It's so the idea behind pair trading is to find two things that are linked. By the way, when I say trading, I'm not getting in and out of things, okay? But pair trading is basically about finding a couple of things that are very closely linked. In other words, they move in tandem. So,
Yep.
like a good example might be ExxonMobil and Chevron.
Or Coke
Okay.
and Pepsi
Yeah,
or
Coke and
Walmart and
Pepsi is another one.
Target.
Right.
Yeah.
One of my favorites is Verizon and AT&T.
Okay.
Okay. Now, as an example, you could look back for a decade, pick a random couple of dates every year, maybe July 1st and January 1st, and you go back for a decade and you get those 20 prices and you'll see like a ratio, like Verizon and AT&T. Let's stick with them because I'm very familiar with it. If you look at about a 10-year history, Verizon tends to trade at about a 1.9x premium to AT&T. So when that 1.9 ratio goes considerably higher, what it's telling you is that AT&T is underpriced or Verizon is overpriced. And so if you're going to throw money at the sector, it's best to buy AT&T at that time. right? When the ratio falls and it's very low, like it was, say, in like the fall of last year, October, November, in there, uh, the ratio between the two was like 1.5 or 1.6. So what that's telling you is that Verizon is underpriced. And if you want to throw money in the telecom sector, Verizon is the way to go. So
Gotcha.
again, you find things that are connected and you find what the mean is that they trade around, and that way you'll know which one is cheap relative to the other. So when you want to buy, you're always buying the one that's cheap. Okay. Another excellent example, like I said, is Exxon and Chevron. Same thing. Another pair that I've traded my whole life, I not really traded, but made decisions based off of is like the gold to silver ratio. Okay.
Okay.
So you look at the ratio between the two, and historically the average is about 55 to 60, and that goes back 50 years, right?
Hmm.
So when the ratio is very low, maybe say in the low 40s or even lower, at that point you'd want to buy gold because gold is cheap. When the ratio is very high, like in the 80s, 90s, or hundreds, I think right now it's in the 80s. If you're going to throw money in precious metals, that tells you that silver's underpriced, right?
Hmm.
So that's kind of the way that you can guarantee to yourself that you're always buying the asset that's cheaper. Okay. Now you got to pick your pairs and make sure that they move in tandem. You know, when ExxonMobil's up 2% on a day, Chevron's usually up 2% on a day. You know, Verizon is down 1%, AT&T will be down 1%. They tend to move in tandem. Once in a while they separate, and when the ratio gets out of whack, you know which one to attack.
Gotcha.
And that's kind of how I do it. I own both gold and silver. I own both Exxon and Chevron. I own both AT&T and T and Verizon. And when you want to deploy money in a given sector, you look at which one is cheap relative to the other, and it's served me well over time. It's got me buying silver when the ratio is 80, 90, 100 to 1. When it goes back down to 40, you buy gold. If you really want to get greedy, you can sell one when you're buying the other. In other words, if Verizon is a deal right now, you sell all your AT&T and T and buy Verizon. But that's more of how traders think, and I'm more of a long-term investor. Um,
Yeah, the definition that I read on pair trading was that, but even trading derivatives around it. So, like if
yes,
Verizon gets out of runs too hot, and you find value in AT&T, you actually probably buy puts in Verizon or something.
right.
Is that yeah?
Because the idea is that they'll both regress to the mean and get back near the ratio, which is held steady for 8 or 10 years. You can just do it by selling the Verizon and buying AT&T, and then when the ratio goes the other way, you sell the AT&T and buy Verizon. It's a little on the greedy side, and I don't. Again, that's more for traders, and it's not really my area because I like to invest for long term.
Hmm.
And so that's how I look at things. The gold to
Like
silver
why?
ratio.
Yeah, it's almost like an entry point system for
Right,
you. It's not a
right,
trading hedge for
right.
you. Yeah.
Now, right, if I was looking to get out or looking to lighten up in those areas, I might do it the other way and say, well, which one of these is overpriced? You know what? Right now, Verizon's overpriced. Let's get rid of that.
Hmm.
So if
To
I want to
trim.
lighten up in an area, so you can use it as an entry system, you can use it as an exit system, and you can use it as a trading system. But as long as the things are heavily correlated, there's knowledge to be gained there, and there's some tactical advantages in keeping an eye on those pairs. And that's another one that I wanted to bring to you today. And that we've talked about it briefly before, but one of the big pair trades that I make is silver relative to the SILJ. Now, the SILJ is basically an ETF which contains all the big silver producers, including like Hecla's in there, First Majestic is in there, Core is in there, Silver Wheaton is. I mean, all the big boys are in there. Okay,
Hmm.
and it's basically an index. Now, the thing is, um, if you look historically at the ratio between the two, this is the most out of whack I've ever seen it, ever.
Yeah.
The ratio is it's just insane. Like
What's the junior miners ETF again?
SILJ, yeah. Which no, S
ISLJ,
like Sam, SILJ. Sam, Ida, Lincoln, John.
not Y at the end.
No, Sam, Ida, Lincoln, John. There you go. Yep.
All right, so this is what I'm gonna do. I don't know if you can see this. I'm gonna
Yeah.
try to overlap them, right?
Yeah. There you
So we can
go.
see okay. So it depends on how far we go back, right?
Right. So, like, look, here's a good point. If you were to look, I looked at 5 years ago today before when we got on this podcast,
S-
just for a
Big
reference point.
difference. Silver's almost 100% higher.
Right. And that should be reversed because the stocks should outperform the metal that they produce. And the reason is that they're able to lever the profits. Okay. For example, I'm a big fan of Hecla Mining. They just released their earnings about a week ago, and it costs them about $18 an ounce to pull silver out of the ground. So if silver's $25, they're making $7 an ounce. If silver's $90, like it is today, they're making 70. So they 10x their profits, right? In theory, if you 10x your profits, your stock price should 10x, right? Now, silver at $25, like it was 5 years ago today, I looked it up. Silver was at $25 5 years ago today. The SILJ was at 1750, right?
Hmm.
Silver has gone up 3.5x in that time, and the SILJ has barely doubled.
Yep.
So what does that tell you? If you're looking at a pair trade, SILJ is grossly underpriced. And I mean, I've never seen it this far out of whack. So if you believe in pair trading and you believe that this move in silver is for real, which I do, then anything SILJ has to be underpriced at these levels. It could triple from here, and I think it would still be cheap. I know that sounds like hyperbole, but it's not. You know, if you look at these two and how they've traded relative to one another for years, it's the most out of line I've ever seen, and I follow them closely. I do.
So are you saying that the miners should, as a group, for example,
Yes,
should be trading higher than silver today
they should be way higher. Yes, they should be way higher because
than the commodity
again,
itself? Okay.
again, they're able to lever the profits. Since
Hmm.
5 years ago, if Hecla was making $7 an ounce on silver, they're now making 70. So they've 10x'd when silver has only 3x'd or a little over 3x, right?
Yep.
So why has silver gone up 3x and yet the SILJ is barely doubled? That's completely backwards. It's
Hmm.
completely backwards. Now, if you believe in pair trading and you believe that things should be tied together, and I do believe that silver producers should be tied to what their metal is doing, then this is again by any metric you want to use and any standard you want to use, SILJ is grossly underpriced. And I thought this at the beginning of the year, the last time we did
Oh yeah,
yeah,
I
it's on
remember.
my list of right, it's on my list of things for 2026 that I think is going to do very well. It was I think 2028 then when I recommended it. It's closer to 38 now. But silver's gained considerably. Silver's up a
Yeah.
lot more. And that's just not the way that this industry works. And there's something out of whack here, and I can't put my finger on what it is. Maybe
Well,
there's some powerful people that think that this move in silver isn't going to be sustained or isn't going to be real. But you look at the earnings these companies are putting up, they're stellar. Although I wasn't particularly happy with Hecla's, but some of the other ones, First Majestic, Coeur d'Alene, quite a few of them have had stellar quarters. And I think that's only going to continue too, especially if silver stays up here at $90 an ounce. I mean, we're already almost 2 months into the quarter. Um, silver's probably averaged, I would guess it's averaged 85 to 90 this quarter. which is considerably better than the 57 it averaged in Q4 of 2025.
Okay.
So,
I am looking at this chart comparison. I don't know if you can see it, but I only went back a year and it shows, AG, ticker, First
yeah,
Majestic, and
yep,
Hecla
yep.
outperforming both the junior miners ETF and the silver. Is that correct? So I guess
On a
on the
one
one
year,
year.
that looks correct. Yes.
Okay.
On a 1 year, that looks correct. On longer terms, that's not the case.
Yep. You're right.
And that's why I'm a big picture guy. I'm looking at it in months and years and not so much, weeks and months.
Yeah.
Um, it gives you an idea that I think these things have a lot further to run. They really do. And that's any of the miners. In buying the index, you're not going to be chained to anything company specific. It's how's the index overall going to do? And to me, that part of it is a no-brainer. Even if one company, doesn't show up or fails or has a mine shut down or whatever, the industry as a whole is so grossly underpriced that I think there's value there. I really
Hmm.
do.
Yeah. Here's a good one. It's the 5 year, pretty much. Oh no, it's more than 5 years. Here's 5 years. But if you go a little bit back to 2000, so this is almost 9, 10 years, silver wins.
Yeah, and that's not the way it should be.
Yeah,
The miners should be outperforming because they can lever their profits.
right.
It's a hard thing to understand if you're not familiar with how the industry works. Um, but I tried to give you an example with Hecla with silver at 25, they're making $7 an ounce. With silver at 90, they're making 70. So they should, if you can 10x your profits, your stock price should 10x to reflect it, right?
Yeah,
And that they're just one example. There's other companies in the same boat, but the entire sector as a whole is struggling, and that part of it doesn't make sense to me. And
sure.
so I've added to SILJ considerably in the last
Why
couple of
did
weeks.
Hecla sell not perform well after earnings? Why do you think?
Uh, I don't know that it has anything to do specifically with the market reacting to it. But I'll give you an idea. And the idea is this. If you look at like Q3 for Hecla, the average silver price, realized silver price was like $39, or let's just call it 40, right?
Hmm.
And uh, average uh, price in Q4 for silver, I think, was like 57, right? So that should be another $17 per ounce produced flowing to the bottom line.
Yeah.
And they didn't have anywhere near that. It was considerably less,
Okay.
less than what I expected. And part of it is Q4 is typically that you don't produce as much in Q4 as you do in the other quarters.
Hmm.
So that's part of it, which I did expect that. But they should have had, in my opinion, their free cash flow should have been a lot higher, and it's tied to that. Now,
Yeah.
again, silver averaged $57 in Q4. What is it averaged in Q1? We're probably around 88 to 90. So
Yeah.
that's another $30 per ounce that should flow right to the bottom line. And you start looking at what they produce per quarter. I mean, this company they're printing cash right now. They
Yeah.
just
Look at
are.
this. You see it?
Oh yeah, 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 absolutely. And I think
Uh,
that's low. I think it should have been a lot higher.
yeah.
But and again, it's not just Hecla. It's the other companies are in the same boat. You could look at AG First Majestic. You could look at Coeur d'Alene, which is CDE, and they're all same thing. Endeavor, EXK, that's another one. Um, every one of these companies is going to be benefiting from this. And when you look at what they were selling silver at just 2 quarters ago in Q3, they were selling it at $36. Now they're selling it at 90.
Hmm.
These profits for these companies are going to be going up 5, 10x over this quarter and next, and that it hasn't been reflected anywhere in the price. of any of them. It just hasn't. So I don't know. It's worth investigating and worth looking at. Uh, if you're trying to find some place that's underpriced, like I am,
Yeah.
and it's one I've thrown considerable capital at in the last probably 6 months, and I've really added to it in the last few weeks.
Yeah. Well, my listeners definitely follow you and make money. I just this is too out of my comfort zone. I just don't understand the industry enough.
Right.
And I'm good with buying Meta, like
I
that's
get it.
the only stock
I
I
get it. I don't
understand.
understand that industry enough. So I've completely missed the boat on all those Mag 7 stocks. I missed the boat on Nvidia. I look at the numbers they put up and I'm just like, wow.
Yeah.
And I
Yeah.
got to wonder how long they can keep it up. But you know what? They just put out another good quarter. Good for that, man. And I'm
Yeah.
happy for the shareholders.
Yeah.
So,
Um
but anyway,
s-
that's another one worth looking at. And
okay.
and the key there is the ability to leverage the profits. And if you once you can wrap your head around that, it'll be easier to see how underpriced that sector is.
Okay.
So anyway, that covers my pair trading segment today.
Thank you
Uh,
very much.
we have any time left to discuss some Bitcoin?
Yeah, let's do it.
Do you have any opinions on what that's doing these days, or
Um, you know what? I did. Um, but I'm drawing a blank right now. Um, I certainly think that the backdrop today, globally, macro-wise, is not healthy. I think there's a lot of dark clouds around,
yeah,
and none of them make it promising for like Bitcoin to be your savior right now. I think the fact that gold and silver, well, pretty much gold did what it did. I mean, I think that's a punch in the gut for, the Bitcoin narrative. And we have like some serious headwinds, and it's not because of SaaS being threatened by AI. I mean, that's like one
yeah,
of many things. Think about, all these countries that were in a surplus, and they get pissy about tariffs, and they don't maybe have, I mean, there's obviously international sellers of our bonds, our US Treasuries, and US Mag 7 stocks. So there's this leak that's coming that's being sold overseas. Thankfully, the US, I mean, the retail investor here in the US, look at what they did in April. They bought the crap out of that dip during Liberation Day last year.
yeah.
So if the indexes fall apart again, I'm not concerned. I think that there's still value in the Mag 7. Uh, so that's my thought, and I think that's why Bitcoin, sniffs fear. It doesn't like this macro backdrop, and it obviously is trading alongside the IGV, the SAS ETF, which it shouldn't.
That's kind of
But that
surprising to me. Yeah,
Yeah, but that's okay. My idea is that, these are the dark times, and, spring is right around the corner.
yeah. I think we can agree that Bitcoin right now is in a bear market. Whether it's a cyclical one or secular one, I guess we could argue that too. But I believe it's cyclical, which means it's going to be relatively short term. Um, and if you look at how things behave in a bull market, it behaves where people basically are trained or conditioned to buy dips. So every time something dips in price, you buy the dip and you ride the bull higher and higher and higher. When a bull gives way to a bear, when does it give way? When people stop buying the dip and buyers are exhausted, right? So into the bear market it goes, and that mentality, the buy the dip mentality, flips to one where you basically sell all the rallies. You sell the rips, right? So the price runs up, the sellers step in, and they push it back down. And I think that we're going to see a fair amount of that for a while until the selling gets exhausted. How long is that going to take? I don't know. Could take 3 months, could take 6 months. I don't know. If this is a cyclical bear, which is my thesis or what I believe, uh, it'll be 6 months at the most before we're out of this. When we discussed Bitcoin when I was on your podcast last, I think it was just at 90,000, and I had told you that if it breaks below there, it was going to fall fast, which it did, and it seems to have found some support in the 58 to 66,000 range, which if you're looking back in the last 5 years, it does look like it should find support there. Now the question is the selling done? And what is it going to take? Or what are the charts and the price action? What's that going to have to be to realize that the selling is done? And when I was on last, again, we discussed how the um, uh, three zones on the way up to the peak were all pitched left to right. Um, they are now pitched the other way, which is indicative of a bear market. So what do we want to see here? We want to see something that's maybe pitched a little down from like 66 to 58. Maybe it makes a new low at 58, something like that. And if we see that, then I think the bear market will be just about over. It might just take a few months for the sellers to get exhausted. And at that point, I think Bitcoin could catch a bid and take off. I do still believe in the asset long term. There's no doubt about that. And I don't care if it goes all the way to zero. I'll write it to zero because I believe in the asset.
Yeah.
Uh, in the meantime, the question is, where's it going to catch a bid? There's a lot of congestion in that 56 to 64 area. So I do think this could be a bottom for a while, and hopefully it'll hold, you know?
Yeah. Yeah.
So
I would say argue to people that are down in the dumps is mm, hard as this thing falls, the way the asset is fundamentally built, that it can go in the other direction as
right,
hard,
the
right?
rallies are just as sharp.
Yeah.
And truth is, we've never seen an asset like this. It's finite. There's only so many out there that are available. And as long as capital continues to flow into that sector, it's a matter of time to we're at new highs. And a year from now, we're going to look back at this and go, man, I wish we bought more at 64.
Yeah.
I know that's coming. And I'm still buying in here. I'm still buying MSTR. I'm throwing money at both of those things
Yeah.
because I think they're both grossly underpriced.
Yeah.
So
I can show you my MSTR holdings. Hold on. Uh, so you can see what I'm dealing with. See, I'm not buying more MSTR. MSTR is right here. I'm down 53%.
yeah,
That's my holding in my portfolio. I
what's
mean,
interesting about it is i- if you liked it at 53%, you're down. So that means that your average cost is somewhere around 260. If you liked it at 260, you got to love it at 130, don't you?
it's all about risk management now,
I
you
understand that.
know?
I get it. But what's interesting about it is when it was at 260, it was trading at, an MNAV of 1.2 or 1.3. So in other
Yeah.
words, you were paying a dollar to get $1.30 worth of Bitcoin. And now it's the exact opposite. You pay a dollar, or you're paying 75 cents and getting $1 worth of Bitcoin. So
Yeah.
theoretically, it should be a considerably better buy here. And it should, on the way back up when that day comes, it's going to lever the returns. So having said
It's
that, I did
that's why I haven't
recommend,
sold it.
I know, I did recommend MSTR a while back, and clearly that was a mistake. I think I recommended it around 170. It's like 130 now. Uh, um,
Yeah, well, you're 4 for 5. I
but
mean,
I'm
your
still
batting
I'm
average
still
is pretty
adding
damn
to it.
good. Yeah.
I'm still adding to it, and I'm still a believer long term. And their preferreds. I have a lot of money thrown at their preferreds too. I've got most of my cash sitting in STRC, which is collecting 11.5% right now. Who else can
Yeah,
you get that kind of return?
sure.
Oh, and it used to be I just let it sit in a money market and collect four. You might as well let whatever your cash position is, sit and collect 11, especially tax free, or not tax free, but tax deferred. So,
Sure. Now, if it makes anyone feel any better, I did buy the Bitcoin dip that one day we hit the lows around 65 or so. So
yeah,
maybe less. I think it dropped less that one day. I can't
yeah,
remember when it was. It was like 3 weeks ago.
yeah.
Um, and I added to Palantir too. And I also added, did I add the app Lovin? I did add the app Lovin. So my three buys for the year of 2026 have been Netflix, AppLovin, Palantir, and Bitcoin. Four hate it stocks right now, you know?
Wow. You're getting them all on sale. Not App Lovin', I don't think. They're not really on sale, are they? They're still plumbing highs, aren't they?
Yeah, AppLovin, had a bounce today, but no, that they've been off
Oh, have
the
they?
highs.
Okay.
Yeah, it's pretty
It's
large
not on my
sell off.
watch list, so I don't know. The others, I do follow all the others.
Yep.
But like I said, I'm with you. I've added to those energy positions we talked about earlier, Centrus, Constellation, Schlumberger. I've also bought more Exxon, and I bought more Energy Transfer. So I bought all five of those this year. I
Hmm.
bought SILJ, and I bought a load of Mister, man.
Yeah. Well,
I'm
when
gonna go down with a ship on that one. If it goes to zero, I'm gonna take a big L. But I, it's going to lever the returns on the back up on the once we get back into the bull market and the sell the rip mentality goes away and we get back into a bull, and it's just a matter of time. It is. The asset is too good. It's too sound. It makes sense, and so long term,
it's not
that's where
popular
I'm
now.
at right now.
Yeah, it's the opposite of what Josh Brown calls halo stocks. It's the
Yeah.
people want physical right now.
So
That's the
Halo, help me with that. That's what is it? High asset, low.
yeah.
What's that stand for? Something like that? High
Hold
asset,
on.
low obsolescence. Is that what it is?
Low obsolescence. Yeah,
Yeah.
meaning like it's hard to replicate, and it's like your McDonald's, your Deere, your Caterpillar.
So high assets. So silver miners then.
Yeah,
You
definitely
know,
anything physical for sure. Yeah.
right,
Any
right.
yeah.
And nuclear
Why am I
plants,
drawing a blank of what heavy assets is what the HA stands
heavy
for.
assets. Okay, yeah,
Yeah.
got it. Yeah, I've
Um,
heard that acronym thrown around a couple of times, and I wasn't quite sure what it stood for.
yeah.
Uh,
But I still subscribe with the idea that, even something like AI, and this abundance of information and abundance of productivity and all that kind of the Jordy Vesser thesis is like, well, eventually you'll be attracted to the most scarce asset ever invented,
yeah,
because
yeah,
it kind of sets up for that. But
right.
yeah,
I'll
we're
tell you what,
early.
I've had some interesting AI conversations with people lately. There's fear for a lot of people in that industry. I talked to quite a few of them recently, and I could tell you this, man, the fear is palpable.
I
And
wanted to ask you, are you using AI at all in your everyday life or
no, I don't. I'm trying to familiarize myself with it. I mess with Grok a little bit here and there, and I have it help me with research. Like I had some theories that I've run across it about different things, and I do like what I'm seeing. I haven't really used it in any of the articles I've written or anything like that, but technology doesn't come easy to me. I struggle with it.
okay.
Okay. And so it's hard for me, but I see the value in it. Okay. My wife's an accountant and she uses it to write emails and to generate letters and stuff like that. And it's actually quite good. And
Yeah,
it saved her time.
sure.
And I see value in that. I do. Uh,
Yeah,
and I've got, like I said, other people that I've talked to that are in different industries and they're dreading it. You know,
sure. Yeah.
attorneys and any white collar jobs specifically. If your job is to sit in front of a computer all day long and make decisions, man, there's a target on you.
Yeah.
And I don't care what industry you're in, because at the end of the day, I think AI can do all those things better.
Yeah, I have a friend at Oracle who's frightened. I have, anybody in the coding world is definitely frightened. But my suggestion to you is to ditch Grok.
Oh yeah.
Um,
Which one should I be using?
pay, I think it's $20 per month, and try Claude. And
Okay, isn't that the one for coding?
no, they have a LLM interface. But
Okay,
yes, it is for coding too. And so is ChatGPT. They have Codex, and Claude has coding too. But it has I'm very dependent on it for my actual 9 to 5 job.
okay.
And
So
I
what
use
does it do? What does it do for you specifically?
it's unbelievable. I mean, it is
Really?
scary good. Yeah. I'll give you a quick example that I gave somebody the other day because it comes to mind. I had I sh my supplier shipped a full container of raw shelled peanuts. Let's use this as an example, in 2,200-pound totes. My
Okay.
customer sends me a note late at night, like, what the hell am I supposed to do with this? Takes a picture of these big totes on a truck, not palletized. And, they don't have the equipment to take off a 2,200-pound tote if it's not palletized. It was supposed to be
Right.
palletized, shrink wrapped. I took that picture, threw it in the cloud. I said, please help me, dear God, because I have no idea what to do. And it had noted, like, okay, here's a few options on how to tackle this situation. For one, like, they noticed that there were some slip knots on the top of the tote, like loopholes for if they had particular equipment, they could actually take it off of the truck. So it helped me. I would have never known that if I didn't use AI to
Wow.
find that in the photo, because I'm not in shipping. That's not my thing. I'm in sales.
Sure, sure.
We manually type up our own POs. We get a PO from the customer, and then we submit it to the supplier on our letterhead or our order head. Claude now does that. We don't manually type up our POs anymore. We trained it to show what the PO is and what an old PO is. Now it makes a few mistakes, so like but it saves so much time. So when you say it's the coding one, it's kind of like you can program things now with just using words, and actually Cowork, which I haven't played around with because I have a desktop computer. It's not a Mac, but if you have a Mac laptop and you play around with Cowork, I mean, it does an unbelievable job of like just organizing your files and your folders. And you'll never, like you have to be careful. You don't want to make a mistake and it loses something, but that's like the next step, I think, in
Right.
how where
And
this is going.
who's behind Cloud?
Anthropic.
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 Okay, right,
Yeah.
right, right.
Yeah, Microsoft has a holding in, I mean, has a stake also in Anthropic. I think they have a larger stake in OpenAI.
Yeah, I think they were ChatGPT, if I remember right. Yeah.
Yeah, and Amazon is has a large stake in Anthropic. Well, it's not that large anymore because Anthropic's valued at like 380 billion, and I don't know how much Amazon has a stake in them. But long story short, I recommend doing Claude, and then the amount of research it does for me on an everyday basis for just Substack, you know? Um, it's pretty darn accurate now. I mean, I was using ChatGPT every single day. And I made the switch finally to Claude when all this hype came around it like last month. And I don't know if I'm ever going back. I'm fine with Claude. But a
Well,
huge leap in intelligence. It's incredible.
I'm going to give it a whirl based on your recommendation. I have
Yeah,
messed with
check it out. Let me know how it goes.
ChatGPT. I have messed with Grok. I've not
Yeah.
tried Claude, but I'll give it a whirl, man. We'll
Yeah, it's
we'll see how it
cool.
goes.
All right. All right. Well, hey, we went probably really long, so
Yeah.
I'll try to get this out tonight, and I'll just recap it. Where can people find you?
As always, I do publish some articles on Substack. My pseudonym is Bag Holder. If you look on there, you should be able to find me. Uh, that's it, man. That's the place to go.
All right. Thank you so much. We'll have you back on very soon. I promise.
Sounds good, Colin. Thanks for having me.
Thank you. Bye.